Do you want to know what happened in the market through the end of 2018? You're definitely going to want to watch this episode of Tom's Take. We're going to break it all down. This is Tom's Take. I'm Tom Toole. We are talking about how's the market, the number one question out there for any consumer. What's happening in the market, and what does that mean if I'm thinking about buying or selling a property? So we just got the year-end stats for 2018 for Chester, Delaware, Montgomery counties, as well as the city of Philadelphia. Let me break all the numbers down for you and then tell you what it means as we head into the second quarter and head into the spring market. So first and foremost, the number of homes that sold year over year from the end of 2017 to the end of 2018 were down 1.2%. So a little less properties were selling. Not a ton, but enough that it's noticeable. The average sale price was up 1.4% year over year from 17 to 18. So prices are still going up a little bit. The cumulative days on market, so the total amount of time it takes for a property to sell. And the reason I say cumulative is that a lot of agents will mess with your days on market. They'll take a home off the market after 15 days, relist it at a new price. We're talking about the actual amount of time, so the real data point is down 11.2%. The range right now is still in that 42 to 63 day window. That's the average of how long it takes for a property to hit the market until a contract's signed. But we're seeing numbers as high as 80. And mind you, these are for the homes that actually sell. So that number is down 11.2%. So it's taking less time for homes to sell. Most notably here, where the market breaks, the trade up or starter home market versus the luxury or premium market. So to give you those numbers, home sales above 600,000, again, this is Chester, Delaware, Montgomery, Philadelphia. Those homes above 600,000 ranged only from 4.5% of all the sales, and that was in Philadelphia, up to as high as 13.7% of all the homes that sold. And that was in Chester County, with Delaware and Montgomery coming in between. So what we're seeing is the premium luxury market is only making up a small percentage of all the homes that are selling. So when you want to talk about absorption rate, how long it takes for homes to sell, you want to take note of that price point break. Inventory still remains at less than 4 months through the end of December. What I can tell you is the early returns in January and in February, when we're filming this, we're seeing inventory creep up a little bit. And mortgage rates, and this is as of the 22nd of February, they fell to a 4.375 rate on a 30-year fixed loan. That is the 1-year low. Rates have not been this low in a year. So I've done videos about this. We've seen this stuff. Everyone was saying rates are going to be higher. They're going to go up. Well, now it looks like they're settling in at the sub 4.5 number. So what does this all mean for buyers and sellers? So I just threw a ton of numbers at you here. So if you're thinking about selling, what we're seeing is that prices are still increasing, but not at that same rapid pace that we saw from 2012 up until about the end of last year, showing us the market's returning to more of a normal market rather than that historic real estate economy that we just went through. 1.4% basically tells me if you're thinking about selling your home, price your property where you think it's going to sell for, and right at the last couple of homes that have sold that you view as the best and most similar comparables. We're also seeing that it's taking less time to sell. So if the property's not moving and you're in that trade up or first-time home buyer segment, it's critical to adjust more quickly than waiting 30, 60 days if you're getting traffic and you're not getting offers. It's taking less time to sell. The number's down 11.2% since last year. So speed is going to be the name of the game. And with inventory starting to creep up a little bit, I would not wait until April or May or June to put your home on the market unless you've got a personal reason to do it. That always trumps market strategy. You want to get your home on the market now when there's going to be less competition. It's documented that the most homes are going to hit the market in the spring. This happens every year. And seeing these numbers start to creep up, but coming off a sub 4 month inventory supply through the end of the year, shows me that there's opportunity now in the market if you're ready to sell at the number that's a fair market price and the number that's going to be the most money available to you within the marketplace. So if you're a buyer, what does it mean? So sellers, we've got move quickly, prices are still increasing but not at the same rate, and homes are selling faster, so be quicker to adjust. If you're a buyer, rates have come back down again. I am still clear they will go up and get north of 5 at some point. A lot of that's going to depend on what the Fed ends up doing, how the economy continues to do. Those are all factors here. So if you're thinking about buying and you see a home that maybe you're 85% sold on and not 100% sold on, I've got some hard news for you. The 100% home probably doesn't exist. So look at the financial component here. Can you lock in a lower payment that's going to save you money long term? That's the big question here, and that's what I want you to be asking yourself, because every time that rate goes up, it costs you more money and decreases your affordability. So maybe you can stretch a little bit with a 4 3/8% 30-year fixed rate, and you can't buy that same home at 4.5 or 4 3/4. So this is something really to consider, and what I'm seeing with these rates, and knowing that homes are still selling fast, be quick to the market, make sure you have an agent or a team that is getting you into properties at a rapid pace so you're not missing out on opportunities, and know that the rate is going to save you a lot more money than anything else. I threw a ton of data at you here, so if you got questions about a specific thing, a specific situation, your home, an area you're looking in, that's when you need to reach out to a professional, whether it's me, our team, somebody else, because we know that even within our marketplace here, when you go from Haverford Township to Westchester or to Lower Marion or to Phoenixville or somewhere on the main line in between, or in Media, wherever, these numbers are changing, and there's different breakpoints within the market, and even within the same school district, there's kind of micro markets like Media Borough within Rose Tree Media Schools, Westchester Borough, all the same. So get some local expertise on what you're looking for so you can use this data to make a really well-informed decision. I'll be back next week. Thanks for watching.